Hi, everybody. It's Steve Dixon here with Keller Williams Edge Realty. And we're here today with a great guest speaker, James Loewen with Loewen Group Mortgages. And he's going to come at us today and just discuss a little bit about the market, what's going on from his perspective. So I'll pass it over to you, James, and maybe you can tell us a bit about yourself and your organization.
Thank you, sir. Yeah, James Loewen here, and the owner and founder of Loewen Group Mortgages, right here. Sitting in my very spacious and empty office by myself, practicing, safe and social distancing. We operate very virtually, with all the electronic usage for years now. So business is still, as usual for those that are, of course, out buying or looking to refinance or any needs or questions that way. We've got the office space, but we can help you by phone, online, text, Skype, Zoom, whatever tech you want to use. We're here to help, and anywhere in Ontario and quite frankly across Canada. So, if you're sharing this with any friends or family that are out in BC or out in Halifax, we're here and happy to help them as well.
That's great. So talk to us, James. People have a lot of choice out there, brick and mortar banks, brokers, that sort of thing. What's unique about you guys, and why should people reach out to a mortgage broker in general?
Yeah, I mean, Steve, that's a great question. And actually, as you know, I started at the banks. And the reason that we left was just, I worked for the bank, and it's hard to trust someone that, is supposed to be representing your best interest, but let's be honest, they're employed by the bank, not by you. So, I always compare jokingly, like I wouldn't go to a bar where they only served one beer. What's that guy going to offer me and recommend? Probably just that one beer. And if it's Labatt 50, then I just don't want that. I'd rather have some options. So, we operate as an educator and a facilitator. So our role is to represent you, and selfishly, we want our clients to be really, really happy because I want you to refer us other people to continually help. So, sitting at RBC, I couldn't tell my clients why not to take RBC. I would have got fired. And that's really what we provide here. So to show and outline, varying options, and ensure the math is being done properly for you, and make sure you're doing an informed and educated decision. And that's, during these times, it's going to be things on, James, is it best that I do a mortgage deferral, right? Is that optimal for me? Is that going to be, the long run, is it going to cost me more a benefit? Are there other options to do that? And, running things like doing the math for our clients, Steve, we're doing a lot of that where clients are like, I don't know if it's best if I break my mortgage. The bank is saying something about a blend and extend to term and how the penalty gets, put in. Is that the best match for me? Like my payments may be going down, but did I just, add to my amortization? And just really shedding light where there's a lot of uncertainty and darkness, right? We don't really educate a lot of these things in schools. And so I think people are nervous because they don't want to ask the question and feel maybe stupid, but I can tell you there's no stupid answer questions. And, we'll try not to give a stupid answer and really walk you through, here's where they've blended and made profit on that side to roll that breakage in. And, here's some other opportunities, or if that is truthfully the best option for you, at least you'll have someone who's an expert to verify that for you.
Yeah.
So, that's really what we're trying to provide, and just make sure that our client's best interest, not the bank's profit, is being put forth. And it feels good to work for your clients and not for a bank, because God knows they make enough damn profit. So we try to keep it in our clients' pockets as best we can. And right now, if either you don't qualify for a deferral and you're still struggling, or let's say you have done a deferral but you still have your home insurance, your taxes, your car payment. My kids, as much as I try, they keep on eating, and which costs money on food. All these things. That's not really just going to give you a reprieve. So if you are doing a deferral and you're still going to struggle, please, the biggest thing I can say is prevention is definitely the best first step. Waiting until the very last minute when you've racked up all your credit, or maybe you're going to bounce or miss some payments, that will have long run detriment on your credit and cost in the long run. So, take that proactive step. You're never too early to reach out. We've been reviewing a lot with clients that are still both employed, just, what would happen or could happen, and best ways to structure. So, never too early, never a dumb question. And always happy to help.
That's great. I think it's pretty safe to say that we're going through some pretty unprecedented times, to say the least. Now more than ever, I think people's finances are more important. Why would you suggest that people review their mortgage, regardless whether they're thinking deferral or not? Maybe they can still make their payments. Let's talk a little bit about that.
Yeah. for all of our existing clients we've been going through, we continually manage our clients' mortgages. And the beautiful part of technology is, for us, for any of our existing clients, we just hit two buttons and it pings out to say, here's all the clients, from a year to 2 years ago, mortgage rates were well above 3. So, even if you're still working, you don't need a deferral. I think that there's still some really big opportunities. And if you're not one of our clients, I'm sorry, but we're happy to have you and add you on, and we can still review to say, okay, your mortgage is at 3.49. Well, we can get you 2.25, right? So you've now got the option, and we'll run some simple math. What's the breakage fee? How much is the potential savings that we can look at? And is it, greater benefit than the cost? Then phenomenal. It's also an opportunity if you've got any money owing on, credit cards, line of credit, car loans, et cetera, why not take a peek?
That makes sense. That's great. So you chatted a bit about deferrals. I mean, let's just high level, for people out there that may or may not know some of the pros and cons of doing it, if you can outline that for us.
So you're going to be taking a loan, which will be charging you interest to pay for the interest that you can't pay. Okay. So, and it should really be done as the last resort option. If you have a secure line of credit on your home already in place, use that instead, right, to cover that side. And really what will happen is, once you start repaying your mortgage, when this is done, those mortgage payments will be all interest. So repaying that loan, and once that's done, then your regular payments will resume. From a credit perspective, we had a lot of people concerned, will this result in a late payment and negative in that regard on my Equifax or TransUnion credit bureaus? The answer is no. You are making the payment that is due by using that loan. So it won't have the effect in that regard. Your mortgage maturity date, if your maturity is coming up this year as well. If a client's asking, will that change it? It won't. It just, the balance will be slightly different than what you'd expected at that time. But if it's, in that dire kind of scenario, know that it's not going to have long run devastating impacts into your financials or credit bureau, and do it. If you can't get through on your bank or lender's phone lines, you probably heard this. Not so easy.
No.
Let us know, which lender you're with, if you're not already with us, and we've got specific either online forms, emails, areas, or you can even go to your banks. If they're on Twitter, Facebook, or Instagram, a little hack is to write them through that channel. Let them know, when your next payment is, and they're trying to prioritize on kind of urgency. So we've had some clients successfully get it, calling in on like a Tuesday, and their payment's on Friday. They'd already done the email submission form, which can take 2-3 weeks to get it done. So that's been a little tip or trick to try to get you a little bit, if it is urgent and it's coming up in the next few days, use that way to get and notify them.
Okay. Nice. Good stuff. Let's talk about day to day at the office, or your work environment, I should say. What are you seeing right now, James? More refinancing, debt consolidation? I mean, we've got low interest rates still. Why are mortgage brokers busier now with COVID-19 than perhaps ever before?
Yeah, I mean, it's definitely not as busy on the buyer side, and I'm okay with that. In that, the sooner we all kind of stay home and do our part, and that hopefully this will be done faster, and I can have my entire staff back in here. But it has been we're still doing a lot of switches for clients that come for renewals. We're reviewing a lot of clients, like I say, to see if it makes sense to break and optimize their mortgage and save them more money in that regard. We're still doing as well a lot of private lending and such too. So as I say, if on top of, if the solution isn't there for you and you can't get reprieves either through savings, existing credit you have, a deferral, refinance, we still do have a lot of private lenders that have really stepped up to the table and said, hey, this is a hard time in Canada for everyone. Instead of charging, 12-13% interest rates, they're bringing it down to like 4-6%, which,
Right.
I mean, you're talking about cheaper than credit cards at that point, which is amazing. So, before you do a cash advance from your credit card, which will charge you interest immediately, and generally at 19.99 to 29.99, if you look at the small print, give us a holler in that regard. Because I mean, credit card companies make enough profit too. The last thing we want to see is them, make even more when it should be in your pocket. So I'm really happy to see Canada and a lot of our lenders all coming together in this and doing some right changes to help, people in need.
Nice. Okay, good stuff. When people are evaluating their mortgages and just their financial picture in general, I guess, is it a good idea, James, for people to consider breaking their existing mortgage loan in favor of a better solution altogether?
Yeah, I mean, the answer on that one, Steve, is it depends, right? It's like, it's kind of, I mean, joking, like saying, how much is the cost of a yellow car? Well, depends, right? So we can't give that blanket answer. And I get that often about like, should I be taking fixed? Should I be taking the variable? Which one's the best? And similar, it just depends. The right vehicle for you with a couple kids and everything like that might be slightly different than, a single person living in New York, right? They might want a moped instead of a minivan. So, finding the right solution has to be unique for each client. And then the good part is it's not very difficult math for us to run. We've got some really easy templates to outline for that for our clients. And what you want to be really taking a look at is if your breakage fee is $3,000, but you're saving $5,000. Okay, well, you'd say, well, I'm saving $2,000. Now, you have to keep in mind is that money being added onto your mortgage? And if you pay the same amount, will you actually be lower at the end? And I've seen a few people not quite running the figures enough, and that's why we're here to kind of show you your opportunities to either pay the same amount and just pay down your principal faster, or you could just lower that payment. And what I think the biggest misconception on this one, Steve, is if you're breaking your mortgage and say it's a $2,000 breakage fee, you don't need to pay that out of pocket, right? And usually when I call clients, they're like, James, like, yeah, I want to break it. I want to get that lower, but like the last thing I want to do right now is fork out $2,000, $3,000. So the good news, and in most every bank and trust and lender that we work with, when you're switching it, so say you're at TD, we're going to break, it's $2,500. We're going to move you over to, I don't know, Scotia or to First National or another great lender. They will allow us to cap up to $3,000 of breakage fee on top of your mortgage, so you don't have to pay it out of pocket. Okay. There's no legal fees, no appraisal fees, and the breakage fee has been added. So there's nothing out of your pocket. And we even have some lenders that, we had a client, we just broke his mortgage, $2,000 we added to it. The new lender also is giving him a cash back of $2,500. So he's breaking his mortgage, switching it, nothing out of pocket, and actually got an extra $2,500 at no cost. So there's some actually pretty sweet options out there. Yeah. And he was very, very nervous. I mean, you get it. He's like, I'm not paying anything. I want to make sure this is good for me. I was like, absolutely. Sent him all the figures, and he's like, this seems too good. But yeah, it's a great opportunity to at least find out and review what options you've got, information gathering, as we call it.
Perfect. Good stuff. I think that covers the questions I had, James. Is there anything else you had to add today?
No, you know what? It's been said many times before, but we're in it together. Stay calm. Don't be hard on yourself if you're out there. And like anything, make sure you're doing your research and education. We want to make sure we're providing our clients with the ability to make an informed and educated decision. So that's really what we're going to be here to help them provide. And like I said, reach out. There's no stupid questions at any time. And we're happy to verify. Even if you think you've got the best option, why not just confirm that? So please, anytime, Google us, call us, email us, whatever you prefer, and stay safe.
That's great. Okay. Thanks so much, James. It's James Loewen here with Loewen Group Mortgages, Steve Dixon with Keller Williams Edge Realty. Take care, guys, and we'll look forward to our next recording. Take care.